This trade should have been a 3.5R winner, but I got greedy, and this trade turned out to be for a lot less. My name is Bai. I document every live trade I take and every backtest I run as I work towards consistent profitability using market structure, supply demand, and price action analysis. And this trade taught me something I still struggle with. In this video, I'll show you why a good trade like this can still underperform, how I managed the trade, and then the lesson I learned about taking smarter profits. Let's jump into the chart. All right, we've turned the clock back to just before New York session here. We can see that we have a swing low and a swing high, which means we're bullish on the 15-minute time frame. And I've run a Fibonacci retracement tool from the swing high to the swing low, and we can see that our 50% mark is right here. And that means that any price action in this area will be in the discount area of the bullish price leg, which is what we want. We want to see buyers step in when price is at a discount so that it can go and create a new higher high. And so with that context, we'll zoom in a little bit to today's opening area to see what we observe as we push price forward. Around 8 a.m., we can see that price just barely mitigates the 50% level. But on top of that, it also mitigates this previous day low. So that's two pieces of confluence here, suggesting that perhaps price has collected enough liquidity and reason to now reverse, move up to the upside and target the next form of external liquidity, which is the previous day high, as well as the swing high itself. Because remember, in a bullish market structure scenario, we are looking to take out our highs and create higher highs. At this point, I would drop down to the 1 minute to see if I can get a lower time frame shift as confirmation of buyers stepping in. Here on the 1 minute, we can see the move down that took out the previous day low, as well as mitigated our 50% marker that we had on the entire leg. For me, I'm targeting this supply level as an area of interest. It's where the original move of this bearish activity begins. And so I want to see buyers step in and close above this level to indicate that they have taken control. I don't want to target this level here since it's only one bullish candle that makes up the bearish move. Rather, I want to see conviction from the buyers and target this level. We'll denote this key level with this orange line here. Let's move time forward to see what happens. A little before 8:45, we get our close above our key level. And so that's our signal to drop down to a slightly higher time frame to see if we can find an entry. Here on the 5 minute, we're not really seeing anything too obvious. So I like to drop down to the 3 minute to see if there's a better option. Here on the 3 minute, we have a couple of fair value gaps. This one is a little bit too close to our break, which would result in a very large stop loss. However, we do see that we have tapped into this old fair value gap and created a move up, creating internal liquidity with this low. And it sits right above this fair value gap, which is another confluence on the internal that it could be an area for price to come back to. I place my entry at the internal low here that I assume will become liquidated, and then place my stops just under these external lows. Now for a take profit, this is where it gets tricky. Typically, I issue a 3R tree, which for me would end up around this area, right near these relatively equal highs, a key point of liquidity. However, I have thought that perhaps we could target some greater distances. And so I was looking at these relatively equal highs from a session perspective, as well as the previous day high and the leg high. For this trade, I decided to target the whole run and go for the leg high. I didn't think it was that far away. And so I committed to taking partials along the way as well. Now I'll show you where I ended up taking partials on this live trade and ultimately what happens. Let's play price forward. We can see that we get tagged in a little bit before 9:30 open and price moves quickly to the top side. It takes out these relative equal highs that we had expected. Now remember, this was around the 3R level, and this is also where I took partials. However, I kept the majority of the position on, thinking that this momentum would carry forward and ultimately break the external high. Let's play price forward to see if that comes true. Only a few minutes later, we get the liquidation of most of these highs here. It falls short of the Asia high we were targeting, but if I had stretched it to be in between these two session highs, then I could have been looking at easily a 5R trade here. However, I had my take profit here. And I had moved my stops to this original level, the area that we had originally targeted for a 1 minute market structure shift. And so that's where I had my trailing stop loss. Let's see what happens. And just like that, a few minutes later, we do get the wick at that key area where I got stopped down and ended up with a fair amount of profit. But unfortunately, not the full profit that I could have taken at 3R or even 5R on this particular trade. By aiming for more, I ended up with less. And so the lesson here is simple. Smart exits beat greedy ones every day of the week, because consistency isn't built on catching the entire move. Most of the time, I'm learning that it's built on repeatedly securing high probability profits. I'm not a guru. I'm just someone documenting my journey towards consistent profitability using market structure, supply demand, and price action analysis. If this breakdown helped you see the charts differently, then subscribe. And if you want to see another trade from my journal, then check out this video right here. Every trade teaches something different, and the next one might show you something you've never noticed before on the charts. I'll see you there.